So what do you say, Kyle? Now that we're all out of the latest news and offerings, I think it's time for us to dive into our juicy conversation around IEOs for STOs.
Yeah, it's an interesting idea. We've flirted with it a little bit earlier in the episode, but what were you thinking, Herwig? What gets you the most excited about IEOs?
Yeah, so IEOs, as we mentioned in the start, it is the latest acronym. It's certainly interesting because we often like to differentiate and try to point out that the crypto and the ICO world is certainly nothing to do with the security token world. And in this case, what actually happened with IEOs was they first became popular as the new alternative to the ICO. There's a lot of different reasons for this, but it gives it a lot of logic put behind it, being that if an exchange with its own name and reputation is willing to vet and list them directly onto their exchange, that there's certainly a lot more liability, certainly a lot more reputational risk, and so one would expect that these projects are a lot more vetted, a lot more chance of success, and very interesting. And so that world started to move and adopt, and Binance was a big leader of this new trend to help these crypto exchanges list IEOs instead of ICOs. And as you pointed out, Kyle, it's actually how the traditional markets work. Before you invest in an offering, you want to know, is this investing in the New York Stock Exchange, or is liquidity going to be on the NASDAQ or OTC? And even many don't know that the NASDAQ itself suffered a lot of reputation after the dot-com bubble. A lot of the technology companies that were wiped out were listed with the NASDAQ, and a lot of investor confidence suffered as a result for quite a while. It was through a series of acquisitions and rebuilding that they were able to bring themselves back to one of the leaders today. But this is certainly not new. And in that regard, the concept of an initial exchange offering certainly applies to security tokens as well. As you pointed out, Dreamer is in fact going to be one of the first, if not the first in the U.S. to do so.
Non-U.S. investors only.
For non-U.S. investors, but it's for supposedly a U.S.-based company. So that's an interesting move. But that leads, I think, to a lot of the questions that we're going to talk about here now, which is, how does it work? Is there only one way that it could work? I think personally, the more likely situation is what type of listing is this and what type of asset is being listed in that regard. I mean, are you actually raising money for a new project or a new asset, or are you taking an existing security and listing that instead? And the process of that, I think, is dramatically impacted because at one point, an exchange is meant to be a secondary market, right? It's meant to be the liquidity for these assets after they have been able to find initial buyers on the primary sale. But it certainly seems like for a lot of these offerings, whether they're crypto or potentially someday security tokens, that they are going to be almost raising their money primarily on the exchange, which is certainly not like the traditional markets where one would likely go to a major investment bank and they will help you perform a roadshow, and you will get those primary investors for your offering through that, and then list on the exchange the next day or whenever they end the roadshow, and hope for a pop with the public retail markets now being able to access this. So I'm not sure what your thoughts are, Kyle, but I'm certainly curious myself to see how a lot of these security token exchanges are going to be actually implementing a concept of an IEO, and if there potentially is any risk or regulation that we don't know about preventing something like that from happening.
I think you're totally right. You covered a lot of topics there, and so a couple of things that stuck out to me particularly that I like to talk about were mentioned by you earlier, and so the first piece is the reputation. And so, as you correctly identified, the NASDAQ suffered a little bit and a lot of bit potentially, when the tech bubble crashed and a lot of these offerings were deemed to be essentially worthless. But they've also ridden the reputation of success now that they've listed a lot of very successful tech companies, and a lot of the current largest tech companies are listed on the NASDAQ as opposed to the New York Stock Exchange. And so it is something that is a reputation definer for these exchanges. What kind of assets can you provide for me? And that's all that I really care about. And so the other difference is that oftentimes, at least in current security token markets, you're trading directly with these security token exchanges. So when I want to buy a security token here in the US, I'm buying it from Open Finance. I'm going on Open Finance and buying it from their site directly, as opposed to working with brokers or custody managers who make that intermediary purchase, like a TD Ameritrade or something like that. And so having that extra set of middlemen, it'll be interesting to see how these markets parallel or are very different, because as you're correctly identifying, it's even more reputation dependent when these assets could be exclusively on specific listings. But as we're seeing with security tokens, there is an ability to move your assets from one exchange to another. Do you want to talk about that a little bit?
Yeah, absolutely. So, I guess what you're getting at too is being able to do cross-exchange sales, possibly even cross-border as a result. We know that there are security token exchanges popping up all around the world. And so one has to wonder, you're not going to be able to go and buy Facebook on both the NASDAQ and the New York Stock Exchange. This is also by principle to be able to say that, all the investors have to go to NASDAQ. So will exchanges actually be creating barriers of their own for their IEOs? Will they prevent me being able to take my tokens and go to T0 potentially, even though they might be supported by the same underlying technology? I may not have the right to go ahead and list it on T0, let alone somewhere else. And those are really against the whole concept of security tokens being able to implement a better, meaningful way of transfer of value without necessarily the need for one exclusive exchange to manage that liquidity. So in that regard, I would have to speculate that exchanges are going to have to be open, similar to what we discussed last week with T0 and OFN and Securitize kind of being the underlying technology. But I also love to say that traditional markets are really just being evolved here by the technology. So to assume that everything will just be flipped upside down is also cautionary tale in itself. So I think once again, because of the crypto world, you're seeing new innovation on the security token side, and this is certainly brand new innovation and is yet to actually be proven, especially here in the U.S. market.
Yeah, and I think that the other piece of secondary trading that we're still working on with the security token industry and infrastructure is those market makers, and are a lot of these brokers and custody solutions that, as we discussed, Coinbase is trying to provide, and these players are also crucial to preventing extreme volatility by providing liquidity, which needs to be available in order to be there, right? Just being able to trade it on an exchange does not mean it's liquid. And so there are large financial institutions handling that for secondary markets in traditional public markets, and price discovery will be very important for security tokens and being able to understand what this thing is actually valued at, as opposed to emotional discussion and emotional reaction. So it will be very, very important that as we maybe shift towards IEOs and providing secondary trading for a lot of these tokens, is that we're being smart about how we scale this thing. Just listing 100 different assets on an exchange that may not be quite prepared immediately to list them all or something like that could cause some serious shockwaves as we really try to grow.
I think you're highlighting some key points here, Kyle, which is, unlike with, say, a Binance, who is more focused on the actual smart contract, the underlying tech, making sure that the project itself is very legitimate, to do an IEO for a security token requires a much bigger infrastructure for an exchange to be pulled off. In fact, this is well, the very reason why you don't see NASDAQ or the New York Stock Exchange managing the offerings themselves. It's the very role investment banks play in the space today. So for sure, I think we're going to see a lot of interesting executions and attempts and experimentation with the concept of an IEO. But to really do it properly, the type of infrastructure to make sure you have partners, you have, almost, the right custody providers, the right structures, the right evaluation techniques and tools, and for exchanges that are very specifically agnostic, this seems like an even greater challenge, right? If you were focused maybe specifically primarily on real estate, you might be able to better put in the controls to identify what offerings would be good direct listings right on the exchange. And we have to be fair too regarding the public markets, which is direct listings are becoming a thing now again. You saw Spotify do it successfully. You just saw Slack do it again successfully. So maybe we're not too crazy to think that perhaps this is a route that security tokens will eventually adopt. And the idea that all of the marketplace and liquidity is around the exchange directly, as opposed to these kind of distributed primary fundraising channels like the crowdfunding portals and the communities that are scattered across. You kind of have a more concentrated pool of investors that you can immediately target with the offering, which might lead to better price discovery, demand, analysis, etc. So, I think this is very topical for us to be speaking about, despite the fact that there aren't necessarily huge examples of this yet.
Totally. And then the one thing for investors to be slightly wary of is, as we've seen with the rise of IEOs in the crypto scene, they seem to, just like what we've seen in IPOs over the last 5 or 10 years, is a tremendous initial spike as everyone is very excited about the offering and it has all of the hype. The price hits a certain multiple, and then it seems like many of the initial speculators dump, and it can kind of cause a large or a small term bubble for these specific offerings. So definitely make sure that you're being conscious of what you're buying and you're confident in the long-term propositions, as opposed to just buying off of speculation or things like that, because it isn't healthy for the market, and it's important to build moving forward.
Let's say, Kyle, that IEOs are able to come onto the platform and use this as an offering. Let's take Slack as an example. Do you think Slack could potentially, if the infrastructure was there on the private markets, have considered doing a direct listing on, say, a T0 or an OFN or maybe even a Gemini, than, say, having to go down the route of going public and doing a public offering on the NASDAQ?
Totally. Traditional public offerings are very long, very cost expensive. They are certainly opportunistic cost-wise. It's incredibly expensive in all aspects. And security tokens are an even more programmable, more effective, efficient investment offering. The only potential hesitation is that many of the private securities exemptions do have certain caps. So they have to figure out how much they needed to raise and whether it would work with a private securities exemption. But I think it makes total sense and could potentially even be healthy for some companies, where they could redefine their own reputations or really provide some kind of industry leadership, brand leadership, by taking on new technologies and appealing to whole new investors through that route. So that could be a very exciting offering in a very short amount of time.
Fascinating. I have no doubt we will continue to cover and talk about this subject as we continue the show. However, we seem to be getting longer and longer with each episode, so I think it's time to call it. But as always, it's been a pleasure. I'm looking forward to catching up again next week and sharing with you all the latest.
Thanks, everybody. Talk to you next week.